Seth Freeman, Senior Managing Director at Grassratner Advisory and Capital Group, joins us right now on the phone line from California. Seth, good having you. Thanks much for joining in. We're calling it a temporary truce. The equity markets are fairly happy with that. How are you reading into this? What's the impact on markets? Will it be long-lived or will it be a short-term impact?
I think it will be a short-term impact. I think investors, the markets, were looking for any form of positive news. But as you said, this is a truce. There's not a deal here.
What you think the market? I mean, Seth, leading into the event, to a number of people that I spoke to, everybody was sitting on the sidelines. They were saying there's a 50-50 chance that a truce can happen and a truce cannot happen. Now the market gets disappointed with an unknown. What, you reckon this was not an unknown, or at least it was not a negative unknown? People didn't expect that there'll necessarily be a truce, and they've got some positive news, and therefore this reaction today on the Asian screen and in the S&P futures.
Well, we have to remember that China can play the long game. President Xi is not running for re-election, and nor is the Politburo. And they have the time and a much longer time horizon to hang in there and achieve some of their objectives in this. We have to remember how this started. And so I think that we have to remember that these things take a lot longer than a Monday morning announcement.
What do you reckon, Seth? I heard you mention in your first or opening comment that this will be a short-lived uptick for the markets. What happens next? I mean, the market was looking at the trade war as the one big negative. Even during the sidelines of this truce that happened, there were comments coming in from IMF as well, talking about how growth is lagging. Do you think that comes back to haunt the equity markets?
In the midterm, it's all of this is somewhat interconnected with, like you're suggesting, views on growth, which also ties into expectations or hopes of what the Fed might do. And there was some ideas, I think, that the trade war was actually helping suppress growth, and that would lead to a 50 basis point interest reduction. But now, kind of ironically or perversely, if we see some hope between the U.S. and China, the perceptions of slowing growth might erode a little bit, and the Fed may end up not cutting 50 points, maybe 25, which I always thought was more realistic. But these things are definitely connected.
So what happens then?
We can't forget it.
Yeah, I agree, Seth. So then what happens? One, to the U.S. markets, this temporary uplift movement upwards, how long could it last? Because last week we were looking at some Goldman Sachs indicators as well, which is suggesting that the U.S. markets also seem overbought. One, do you second that view? And if that were to happen, what happens to the emerging market pack as well?
Well, it certainly puts pressure. I'll answer the second half first. It puts pressure on investing in emerging markets. And, in particular with India being such a big oil importer, small increases in global oil prices is negative for India. But investors just don't like uncertainty. And, this hope of a truce, no new taxes, no new tariffs, is well received.
It certainly is. Actually, since you brought up oil, Seth, I'm tempted to ask you, is there a bit of an undercurrent now? The agreement between Saudi and Russia seems to suggest that cuts are here, or the current production levels are here to stay for the 9 months at least. Add to that the backdrop of a temporary truce, and that should be viewed positively. Do you reckon a short-term bottom for crude prices has been made here?
I think we have to wait and see what the expectations are for manufacturing, but also winter, for example. Ironically, higher crude prices are actually good for the U.S. Oil industry because horizontal drilling is more expensive to do than old conventional pumping. So, in a way, slightly higher prices are good for the U.S. oil industry.
Yeah, but one final question on that, Seth, would be that because the near term would also be dictated by how the sentiment is. Do you think the sentiment is setting a stage for some potential upside, or at least capping the downside for crude prices, or you don't believe so?
I don't think it's a bottom, or we've left some sort of base in oil prices. It's kind of strange. We actually have, the U.S. is such a consumer-oriented economy, and consumers are actually generally very happy right now. And it really has to do with what industry is doing. And frankly, the trade war and so forth is putting a lot of pressure on auto sales around the world.